Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, when we talk about the January FNO series that just ended on a weak note, the Nifty after the index has shed about 420 points this series, but all focus will now shift onto the budget week, the most important trading week. And we will tell you how the markets will open up this week. Good morning to you, Shail, and welcome to another this very important week of trade. Of course, what we've seen so far on the Nifty is that the Nifty has declined in the 3 out of the last 4 weeks as well. We are down about 800 odd points from the all-time high levels of the Nifty. But do you think the vote on account budget will spring fresh spirits into the Nifty and the markets again?
Very warm good morning to you, Sakshi. We are 3 days away, 3 sessions away from the interim budget, as also from the end of January's normal month-end issues. But yes, the first trading session of February's monthly expiry begins today, and the cues that are coming from overseas are pretty okay. You have a strong move coming in on GIFT Nifty, so there is a gap up in the pipeline, but will this gap up be sustained? I think that's a bit improbable given the kind of foreign fund selling that we are seeing on frontline stocks. But there are 2 parts to the mood, and we'll discuss both of them. The choice is yours. How do you want me to start, with the positives or the negatives?
Positive for sure.
Okay, so let's get the basics right. The trend for the Nifty is sideways for the moment. The index is caught between a cleft of 34 EMA supporting it fairly strongly and 20 EMA providing a very strong resistance, Sakshi. We've seen the FNO expiry for January end on the back foot, as you were saying, and year to date, which is of course the month to date as well, this being the first trading month of 2024, the Nifty is down 1.7%, and hold your breath, the Bank Nifty is down 7.1%.
Yeah.
And that's primarily because of very strong FII selling that's coming in over the last 7-8 trading sessions. Till about now in January, we've seen the last 7 days of consistent selling, and on Thursday the number was 2100 crores. So if you put it total last 7 days selling, we are somewhere like 35,000 crores on a net basis as far as foreign institutional investors are concerned, and that's acted as a very strong upper resistance. In fact, if you look at the Bank Nifty, that's in intense pain. So ahead of the budget, I think as far as the Nifty is concerned, you'll see a lot of earnings led moves. Even today, there are 4 Nifty companies that are reporting earnings: Bajaj Finance, BPCL, ITC and NTPC, and a whole host of FNO companies including Bharat Electronics, Gas Authority, Petronet, LNG, and in the cash segment CSB Bank. So the earnings are the ones that are going to define the trend in individual stocks. The broader markets of course are in pause mode as far as the interim budget is concerned. Of course, nothing much is expected, but 2 sectors, and both sectors that are doing fantastically well in the markets, there are expectations that the government will act very positively on railways as well as the defense. Both these stocks, whether it's the public sector railway companies like IRFC, RVNL, IRCTC and IRCON and so on and so forth, which are at record highs, are doing extremely well. So the expectation is that there is a likely 20% increase in the budget as far as railways is concerned, and that will go to rolling stock, that will focus on infrastructure. It will increase things like high-speed rail networks, as far as the dedicated freight corridor is concerned. All this is a part of the National Rail Plan, and a lot of expectations being built in. Of course, these stocks we've discussed ad nauseum over the last 15 odd days for sure. As also the defense space, again higher allocation expected to the vicinity of 10 to 15%. So cash stocks and specific sectors continue to do well, and the rest of the market will be led by earnings. We have a lot of them that have come over the last 3 days as well. We'll discuss them in detail. So Sakshi, that's the thing on the Nifty, flat to sideways. I don't think so dips will work. There is going to be a gap up. Let's see how that gap up sustains. And 20 EMA is going to act as a very, very heavy resistance.
Okay. Okay. Let's talk about the Nifty Bank then, that you already pointed out has been a major pain for the Nifty's underperformance of late. Courtesy the sell-off that's seen in constituents like HDFC Bank, Axis Bank as well as ICICI Bank. Now the index closed below 45,000 mark over the weekly basis for the first time since November of last year. It's now down for 4 straight weeks. It's also corrected nearly 4,000 points from the peak as well. Do you see any respite for the banking names in this current week?
Sakshi, I think there is one bit of good news that I'd like to add, and that's the Reserve Bank of India, which is the central governing authority for all across the banking space, has given permission to LIC of India, which is the largest equity player in India, to raise its stake in HDFC Bank to 9.9% from about 5.19%. Of course, this will not going to happen tomorrow or day after. It's a long process. But the point is that this news perhaps acts as a major support level for HDFC Bank at current levels. You remember, HDFC Bank has been the biggest pain point for the bank Nifty over the last 2 months or so, and it also has the highest weightage. I think HDFC Bank was also Nifty's worst performer in January. Let me just get this data for you. But the bank Nifty, as you can see, is now trading near its 200 DMA. So a slight bounce is expected from then on. But the point is that it's in extreme pain. And HDFC Bank, okay, let me just find out. Yes, it's the worst performing stock in the Nifty, Sakshi. It is also the heaviest weighted stock, and therefore you know what the problem is. Down about 15.6% so far in the month of January, and we have 3 more sessions left. So a bit of a relief coming on HDFC Bank if LIC starts providing support to you. HDFC Bank is much below its 200 DMA, and beyond that, Sakshi, there's nothing much to report on the bank Nifty. In fact, I have just written 3 lines for you, which is that it's a sell-on rise, and any dip towards 200 DMA might give you an intraday position to go long, and that's only intraday. There is very strong strength in the index at about 45,400 to 600 levels. There is a very strong resistance there, and let's see how it goes. But at the moment at 200 DMA, you can just look for intraday bounces. It's a weak index, actually.
Weak index thereof. Anything in the F&O space that Shail that you will be watching out for, any particular stocks?
Yes, Sakshi. So 4 earnings today. They are Bajaj Finance, there are ITC, BPCL, and of course you have the third quarter earnings that are coming in again from NTPC. So NTPC is something that you and I have been watching over the last 3-4 odd months. Let's see how the performance is. Remember, the stock is already at a record high, and it has done fantastically well over the last 1 year or so, up about 40%. We also have earnings coming in from BEL, an outstanding performer when it comes to the defense space, Gas Authority of India at record high, and Petronet LNG, one of those stocks which might not have done much over the last 18 odd months, but is showing all signs for a superb performance. So we look at Petronet LNG, and of course a lot of data coming in from cash stocks such as Shriram Finance, outstanding earnings. You have a very good earnings coming in from the likes of Lodha Developers, which is Macrotech. You have very strong earnings coming in from Vedanta's aluminium business. Let's see how it goes. So there is absolutely no dearth of information and stock performances individually. But the broader markets, Sakshi, I think they will take a pause. And I'd just like to add another word of caution. See, we've seen a very strong run up in railway stocks, and we are now just 3 days ahead of the budget. No matter what stock you look at, RITES, RVNL, IRCON, IRFC, all 4 of them are at record highs. This is a point of extreme caution. The sensible people will now wait for the budget document to come in, and it's probably going to be a sell on rise as far as these 4 or 5 stocks are concerned, as also once the news is out, Jairam ji ki, and then profit booking. So one needs to be very cautious on the railway space. Sakshi.
Okay, cautious on the railway space. Let's now welcome our guest on the show. Devarsh Vakil now joins in. He's the Deputy Head Retail Research at HDFC Securities. Devarsh, very good morning. Good to have you with us on Business Today Television, as is always. It's the most important week that we always talk about. We've had weak set of broader markets performance in the January series. What's your own take of how will the markets perform now onwards? What does the trading setup really look like to you? And what kind of expectations do you have from this vote on account budget?
Yeah, good morning. Thank you for having me for the show. So, as you guys were discussing, I think the markets, we need to be a little cautious. As I pointed out last time I was here, it is safer to be, it's better to be safe than sorry. So some of the stocks which has run up a lot, it is better to put some money out of the market and keep about 5 to 10% of the cash for the longer term portfolio. Data driven market, there are so many international and national events and data are going to be disclosed this week. So obviously that will have a bearing on the market. As far as vote on account or budget is concerned, government has a lot of room. I was just looking at the numbers, what was the budgeted for the last year and now. The biggest 3 numbers, the GST, direct taxes, and the fiscal deficit. So they have about almost 30% higher at the half yearly numbers. The direct taxes are 25% higher, and fiscal deficit about 16% higher. That is the kind of expectations a market is building, that government will have a room. And when you have such a great fiscal room, although it is a vote on account and convention says that no major announcements are usually put out in this budget, I'm expecting that there will be some focus on spending because government has a room. So before the general election, usually government doesn't announce big bang reforms, but there should be some hints of more money going towards railways, the infrastructure, water and education and health are going to be the focus. So these are the broad areas where government would like to spend. And I think the next year's budget after the elections will give us more clarity. But I am expecting government's focus on towards spending this budget.
A very good morning to you, Mr. Vakil, and a warm welcome to Market Today. A lot of brokerages, including HDFC Securities, come up with budget picks ahead of the document. 1 or 2 stocks that you can discuss which will do well over the next 2 or 3 days and the reasons thereof.
Right. So, Shail, this time, usually before the budget, we do come out with the budget picks. But this time, what we have decided is that after the budget, once the budget is out, we will have a look at if there is any significant development are there in the budget, and then we will come out with the budget. Our company has recently come out with the one report on auto ancillary and auto component industry. So in order to discuss stocks, I can suggest that we have come out with a report where we have covered extensively all the auto ancillary industry and the opportunity, looking at the supply chain restructuring which is happening across the globe over the next 3-4 years, the kind of premiumization, the effect of EV, effect of government policies. And looking at all these things, we have come out with a recommendation to buy 3-4 stocks. Like we have covered Suprajit Engineering, Sansera, and also come out with a ad recommendation on Motherson International, Samvarda Motherson International. So I think if somebody were to look at putting new money to use over the next 3 to 4 years, gradually, I think they will find good opportunities into auto ancillary space. For a shorter term, for next 3 months or so, I am gradually the kind of news which we are getting, kind of news flows which we are getting from the China. It makes sense to increase allocation towards the metal stocks. I think metal can outperform over the next 1 month or so. So metals and auto ancillary are the two spaces where for shorter and longer term I'm looking at.
Okay. Could you also share some target prices, sir, on the stocks that you mentioned?
Sure. So, Samvarda, we have a target of 129. Sansera, we have a target at 1190. And Suprajit is at 468. So, a detailed report on all these are released, and these are the targets which we have put in. If somebody is interested, they can look it up.
Okay. Fair enough. So, also, what will your thought
Mr.
process
Vakil,
be on HDFC Bank particularly? This has been a major pain point for the markets for the entire January series. But now this fresh news coming in that LIC has got RBI's not to increase the stake in the lender to up to 9.99%. Do you think we will see an uptick now finally coming in on HDFC Bank?
Sakshi, I'm afraid I won't be able to comment. We work for this company.
Okay, fair enough. In terms of the earnings that have gone by, can you also tell us how have you looked at the kind of season that we've seen so far, and any particular outperformers that you can mention?
Right. So, compared to what was built in, I think the IT companies have come out with the guidance, which is little positive for us. So, I am looking to. So, we were a little cautious, and many of the analysts on the street were a little cautious going into the street. Now, going into the results on the IT companies, I think this is the quarter where we will be able to look for opportunities there. Individual stocks in the PSU banking sides have outperformed, and that's where we were bullish. And I think that faith has been also revalidated by the results which have come out. Oil and gas is the interesting sector, and today we have results like GAIL and BPCL, and we expect that these numbers will determine whether to continue remain invested in them or not. And I think these numbers, though subdued, markets have already factored in the subdued numbers. I think there is a room for positive surprise there. So oil and gas and PSU banking are the two sectors where this quarter's numbers are quite interesting, and IT is the space where we are turning little bullish compared to the last time. The sectors which we continue to like and which market is also favoring are the cement and the real estate. I think that numbers will continue to perform, and that cycle is much longer than a few quarters. So we continue to remain our faith in the cement companies and also real estate companies.
Okay, fair enough. So those are the key sectors that you're bullish on: oil and gas, IT sector, cement, real estate. These are the particular pockets you're watching out for. What we'll do is we'll take a very short break, and when we return, we will open up with the pre-opening rates and we will discuss further stock ideas with you. Don't go anywhere, viewers.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back to Market Today. The pre-open rates are in front of us. The tick on the Nifty is slightly unexpected. The GIFT Nifty had pointed to a very green start. Let's see how it reacts over the next 2 or 3 minutes. Let's look at prices instead. HDFC Bank, the highest weighted stock in the Nifty and the Bank Nifty, is opening 1.5% in the green, 1456. The news driving this sentiment on the upside is the RBI's nod to LIC of India to up its stake to 9.99% versus 5.2% now. This is not going to happen immediately, but you'll see some kind of support coming in for this stock, which is down 15% so far in the month of January. What else is in news? Bajaj Finance ahead of earnings, absolutely flat, 7,085. I want to see what ITC is doing. Again flat, 455.65. It's the earnings day for ITC as well. Now, what is ticking in the green? There is a lot of pain coming in on Infosys and TCS. That's rather surprising. Infosys opening tick is 5% below 1585. It's almost inexplicable. TCS 4% lower, 3650. You have Lever down 1/3%, 2428, and I want to see what Reliance is doing. Reliance is likely to provide support today, but then again down about 1% at 2684. So it's a weak opening that's coming in, but these prices will improve. I am mostly certain. The Nifty is now back in the green, flat at about 21,353. Another 5-6 minutes for this trade to click in. And now let's pay attention to FNO minus the index heavyweights. I'm looking at earnings. SBI Card, very disappointing set of numbers. The stock in pre-opening trades is down 8%, 669. Let's look at the gainers in the FNO space. Strong earnings coming in on Cholamandalam Finance. The market rewarding this counter, 1295, 4% higher. You have strong moves coming in on ACC. Remember, the company had declared earnings in the dying minutes of Thursday's trade, 3% up, 2544. I'm also looking at PNB. Strong set of numbers again coming in on Thursday, 2.8% higher, 107.50. Let's look at the NSE 500 space. The Nifty is now climbing 60 points higher, 21,417. Capri Global up 20%. The company is going to announce a split and a bonus, 1128 for you as far as the NSE 500 is concerned. Other stocks which are showing strong momentum is Gujarat Ambuja Enterprises, 396% higher. Strong moves coming in on the solar space, SW Solar, 606.45, 5% higher. And it's cement all the way, Sakshi. I think today is going to be a cement day. Your favorite JK Cement, 42.75, 2.5% higher. ACC, 2.32%, 25.25. We'll be shortly joined by Ashish Chaturmota, fund manager at JM Financial, and let's get a view in. Namaskar, Ashish ji. A very warm good morning to you. 3 days ahead of the budget, and the markets on the main indices flat to weak, but strong traction coming in railway, strong traction coming in defense, and of course, any outperformance on earnings being very handsomely rewarded. What are the two stocks that you are looking for today?
Good morning, Shailji. Good morning, Sakshi. So my sense is, broader markets looks like, we are going to remain sideways, but there are two, three pockets which are seeing very strong trends where we are seeing significant amount of flows coming into market, and we have been very bullish on, in all our discussions on railways, on power, on defense. But I think from a risk reward perspective, power is one sector which looks very, very promising at current juncture. And within that, I think two names. First one would be NTPC, where I think stock after seeing a very stellar up move in the last couple of months has been consolidating for last 5-6 weeks. And my sense is, the way NTPC is going to transition itself from not just thermal based but also into renewable energy. That's where a lot of traction will come. NTPC is committing for a 30 gigawatt addition in terms of renewable energy capacity next 7 years, and that's where a lot of traction is coming to a stock like NTPC. So my sense is around 305, 306, there is a strong base which has been formed on the longer term chart frames, and it looks like from a technical perspective, it looks like stock is headed towards 370, 380 kind of levels in days to come. So our topic would be NTPC, and again, as a disclosure, this stock we continue to hold in our portfolio schemes, Apex PMS. So I think this is a disclosure in NTPC. And the second stock again, which looks very promising in the mid cap or small cap segment, would be a stock like NLC India, where again I think there's a very, very strong traction. So it is moving from just lignite based generation to now renewable as well as coal based generation. So there is an expectation of almost 100% jump in terms of capacity addition from the current 7 gigawatt which they have. So again, we believe this is one company where there will be a lot of traction. Again, from a valuation perspective, it's a Navratna company which is available at a very reasonable multiple. So this gives us a sense that after a stellar up move, also we believe there could be further traction into the stock. From a pure technical perspective, this is a this is a long-term breakout which is going to take place after 15 years of consolidation. So last time we saw a stock around 240 levels, it was in 2008, and now we are seeing this in 2023. So this is a multi-year breakout which is happening in NLC India. So with 225 as a long-term base, it looks like NLC India is headed towards 270, 280 kind of trajectory. Again, as a disclosure, we continue to hold our positions in NLC India in our portfolio schemes.
Okay, very good morning to you, Ashish. NTPC, NLC India, two stock ideas that you've shared this morning. Also wanted your view on HDFC Bank after, disappointing whole performance in January. Do you see finally the positive news flow letting the stock really breathe easy now? LIC now to increase its stake over a period of time to 9.99% in HDFC Bank. How do you view the news, and what will be the impact on the stock now?
So at least Sakshi, good morning first of all, and I think this will give some support to the stock now eventually after a significant underperformance which HDFC Bank has seen, not just with the broader market but also with its peers in the private banking basket. From a valuation perspective, after a very long time, we are seeing stock trading at 2.5 time price to book value. So I think this is also a year low, valuation from a stock perspective. But I think because of I would say that ownership from institutional perspective, it has been on a higher side. And since there is some amount of performance which is lacking, we are seeing a subdued performance. But with this news flow, I think at least we will get some support on the lower end. So my sense is now 1350, 1400 is the level where we will see a lot of a strong support emerging into HDFC Bank. But whether this will result into a significant amount of outperformance in days to come, that is yet to be seen. My sense is ideally the stock should trade anywhere between 1400 to 1550 on a broader basis. If the stock manages to cross 1550 levels, then only I think some amount of relative strength will start emerging into HDFC Bank. So yes, for at this point of time, the risk reward looks promising. But again, on upside, it looks like the upside would be capped somewhere around 1550 to 1600 zone.
Let's look at the performance of Shriram Finance, Ashish. There was a very, very strong set of earnings that came in over the weekend. And of course, it's one of those stocks that you've picked up at about 1800 rupees, now at a fresh high 2307. Given the background in mind in terms of how the earnings have come up, very strong traction there. How do you see the stock? It's up already 14% in January so far.
So we have been very positive on Shriram Finance from a valuation perspective. When we tried to, recommend the stock, it was around 1.2 time price to book. Now, on a trailing basis, it would be somewhere around 2 times, but on a forward basis, it will be lesser than the price to book of 2 times. But with a very strong credit growth and strong, operating numbers, it looks like there is going to be a sustained re-rating which we are going to witness, because if you look at from a peer valuation perspective, it is still at discount to its peers, and that gives us comfort that although we have always maintained that the stock is going towards 2400 to 2500 kind of levels, which we are witnessing now. But my sense is with this new set of numbers, there will be further re-rating which will happen, and we believe 2650, 2700 is on card, so we will continue to ride this trend on upside. From a pure technical perspective, now I think 2200, 2250 will act as a long-term support. So any dip towards 2300 area would be a very good opportunity to add more into the positions, and eventually looking forward for 2650, 2700 zone. As a disclosure, we continue to hold our positions in Shriram Finance in our portfolio schemes.
Okay, let's look at Sakshi, how the pre-open trades have settled. Would you just mark the Nifty and the top gainers there, please?
Absolutely, Shail. The Nifty is now up 80 odd points at 21,433 odd levels can be seen on that one. You can also see the oil and gas space that is clearly under watch list. So you have ONGC that's ticking higher, 3% up. Adani Enterprises 1.2% higher. Tech Mahindra up 1.2%. You also have State Bank of India, ICICI Bank ticking higher in trade as well. You also have Kotak Mahindra Bank that's also moving up. Then you have the IT names like HCL Technologies that is bucking the trend, 0.9% higher in trade. Some of those Adani stocks coming back in flavor. So Adani Power is going to be in focus. I think that's up by 3.5% odd. Adani Ports is up by 0.7%. You have all of these movers in trade. In terms of the sectors, it's oil and gas, PSU banks, private banks that are looking to start the day on a positive note. In the 500 space, you have Gujarat Ambuja Exports that's looking up. Then you have Adani Power that's also looking higher in trade. You have Capri Global Capital at 4% uptick right now. Infibeam Avenues. These are some of the stocks that I'm tracking that are moving higher in trade in the pre-opening space.
Okay, let's get Ashish back into the conversation. Ashish, your view on some of the stocks in the cement space. ACC came out with a flying set of numbers, almost 11% higher on Thursday, and a strong move expected today, as also PNB. Both of them outperformers on the fundamental side. Your technical view and your view as far as the medium-term targets are concerned.
So yes, Shailji, I think cement as a space is looking very promising, because as we go forward, we believe real estate or manufacturing capex, this is a theme which is going to see the traction, and this will ultimately result into more production from most of these cement companies, and even if the price realization doesn't improve, we are going to see some very strong volume growth which we are going to witness from a lot of these cement players. So our sense is ACC from a pure technical perspective has given a massive breakout about 2400 levels, and if this if we, and the way the volumes have participated in this rally, it looks like now a new base could be seen around 2350 to 2400 kind of trajectory. Keeping this in mind, there is a very strong possibility stock will eventually cross its previous all-time high, which is somewhere around 2800 kind of trajectory, and eventual targets would be somewhere around 3000 trajectory. So this gives us a sense there is a good possibility of 20% kind of upside in ACC in coming few months. So I think yes, ACC looks very very promising. As far as PNB is concerned, again a very very strong set of numbers, strong credit growth momentum which we are witnessing in most of the PSU banks in the range of almost 17 to 18% kind of credit growth. In terms of credit cost also, it is somewhere around 1%, so that gives us a lot of comfort. And from a valuation perspective, most of these banks are quoting around 1.2 1.25 kind of price to book, and keeping looking into this strong growth momentum in terms of numbers, it looks like stocks are headed towards 1.5 1.6 time price to book. So keeping this in mind, again PNB has given a massive breakout on a long term chart, and this is a breakout which we are witnessing after 5 years of consolidation. So keeping this in mind, I think PNB is heading towards 120 125 kind of trajectory. So I think a new base has been created around 102. So with a very strong risk reward, PNB looks very promising even at current levels.
Okay, ladies and gentlemen, we are now at the open. The Nifty is up 89 points, 21,455. Bank Nifty a triple century, 350 points higher. Century on the Nifty 500, and the Nifty IT index has also opened in the green. So it's a very good start. Now let's drill down individually. I am first looking at HDFC Bank. It's opened 1.7% higher. Good news coming in via the LIC news, 1461 for you. Let's look at the earnings boy today. Bajaj Finance 0.5% higher, 7116, as ITC flat, actually a percent lower, 451.80. Now let's shift focus to the other index heavyweights. What is Reliance doing? Reliance is 25 rupees higher, 27.29 for you. This is good for the Nifty, which is now scaling up 121 points higher, 21,471. How about other stocks? ICICI Bank a percent higher, 1017. Axis 0.7% higher, 1049. How about the IT twins? ITC TCS down 10 rupees, not to worry. Infosys up 7 rupees, that's good, 1676. What's taking it away in the cash market? Okay, these are all news based stocks. I want to look at what is happening in the F&O space. Top gainers here, if you look at Shriram Finance 3.6% higher, 2378. PNB 2.5% higher, 107. You have a strong move coming in on HDFC Bank, 1.7% higher, 1460. We'll move very quickly to NSE 500 to see market action, and then we'll go to Ashish Chatramotha. Okay, NBCC 7% higher, 122.35. SGVN 5% higher, 122. News coming in, the company's won a 100 megawatt project from a Gujarat PSU. We have Capri Global 6% higher, 1000. Remember, there's a stock split and a bonus in the pipeline. What else is moving? Let's look at the top losers here. We have Cyient. Bad numbers here, 5% lower, 1919. Let's look at the railway space 3 days ahead of the interim budget. We have TexRail 216, 2.8% higher. IRCON 2.8% higher. You have a strong move coming in HBL Power, RVNL, RailTel and IRFC, all up between 1.5%, 2%. Let's touch base with now Ashish. The markets have opened fairly strong, Ashish, on the Nifty. What are the one or two stocks that catch your fancy?
I think Siemens is one stock which we continue to believe has a potential to go up further. As again, a disclosure, we continue to hold our positions in Siemens in our portfolios. But from a pure technical perspective, this is a consolidation breakout which is happening after good, I would say, 7-8 weeks. So keeping this in mind, I think stock is headed towards 44, 50, 50, 4500 kind of trajectory. And on downside, I think 4190 is a new base for the stock. So Siemens would be our preferred bet. And then in the again in the power space, I think PFC, Power Finance Corporation, which has consolidated for again good 7-8 weeks, and I think now there's a further possibility of the stock moving towards 470 kind of trajectory. On downside, I think stock has formed a very strong base somewhere around 410, 412 zone. So again, a very strong risk reward from a consolidation perspective. PFC also looks very promising.
Okay, let's get the Devarsh in the conversation as well. Devarsh, how do you see the market opening? Anything that also takes your attention at this point in time?
Right. So, from a shorter term perspective, I think I would be looking at the metal space as we discussed in the morning. If stocks are trending lower or consolidating, that's a space where I think we need to accumulate. A lot of numbers are going to be announced, economic numbers. First is these US, we will have FOMC, and mostly they will be not giving any surprise this time. They will be quite dovish this time. GDP numbers from a lot of Asian current countries are going to be there, and I expect that the Chinese numbers are started going to improve. The government there is going to announce a lot of packages to support the economy. So all in all, the metal space which has been subdued and where
Any
there is
particular names there, Devarsh? Any names that you prefer in the metals basket? We have Vedanta that posted its numbers. Nalco is taking higher in trade. Any particular favorites there?
Yeah, so some of the so I won't have short-term targets for this, but the names are like you mentioned, steel companies, the aluminum companies, the iron ore companies. I think these are all looking attractive to us from the shorter term perspective.
Okay. Ashish, can you look at this share, Shakti Pumps? It's hit a 20% upper circuit already. How would you look at this stock? And I think, of course, the stock has been in buzzing space. But what fueling the buying here?
So, solar pumps is a very
Risk.
attractive space, and we have seen very strong set of numbers coming from Shakti pumps in terms of the best ever quarter, in terms of the profitability, in terms of top line growth, and that has resulted into a significant jump into share price movement. I
Yeah.
think from a pure technical perspective, it has entered into a new all-time high territory, and that too after consolidating for last 3 years. So my sense is maybe some consolidation here and there could not be ruled out, but looking into the long term structure, it looks like stock is headed towards 1600 kind of trajectory in coming few months. So my sense is this trend on upside will continue in stock like Shakti pumps.
Okay, and they have declared their earnings as well on 25th of Jan. The top line increased by 57%. Their profits increased threefold, 300%. And that's perhaps the reward that the stock markets are giving to its earnings. Shell, what else are you watching?
Absolutely, Sakshi. That's the earnings-led momentum that you've just marked. And like I said, slight outperformance and the market rewards you immeasurably. Let's again look at the numbers, ladies and gentlemen. Very strong moves coming in the entire rail pack. Now you have rights. It was up 18% on Thursday, gaining 5.5% more. Needless to say, a record high. BEML doing fairly well, 2.7% higher, 3288. The Nifty now gathering steam, Sakshi, 21,500 in front of us, 141 points higher. We are already at 922. Ashish, coming to you. This is a question that Sakshi wanted to ask before markets opened. Your favorite space and your favorite one or two stocks in the railway space?
Yes, so Shilji, we have been consistently quite positive on first of all these wagon companies, and within that, I think Titagar Wagon is one stock which we continue to believe is a good story. But yes, from a price perspective, we have seen some very stellar up move. So maybe some dips around 1000 40,000 50 would be a good area to initiate some long positions in a stock like Titagar Wagon. But looking into the order book, looking into the execution capability, we believe that stock will continue to remain in focus, and on upside 1300 would be something which we believe is a strong possibility. Again, a disclosure, we hold the stock in our portfolio, and I think RVNL is one stock which we continue to like in this theme. But as I mentioned, we are waiting for some kind of good dip to actually add more into stock. So maybe around 270 would be a good area from a risk reward perspective, where RVNL will look very attractive at this level. I think the stock has already rallied a very well, and some amount of consolidation of profit booking could not be ruled out at current levels. So maybe a weight of around 7-8% from current levels would be a good area to initiate along in these two names.
Okay. Right ahead of the budget, Ashish, we're also looking at another space that is buzzing, and that is the infra space. I can look at a stock like IRB Infra that's now ticking 9% higher in trade as well. We've already been seeing HUDCO in focus over the last few weeks, and you have a slew of other names like HCC also like ticking higher. Do you see this as a special segment to be focused on in the budget week per se for traders especially?
Yes, my sense is this space will be very promising, and I think there will be a lot of focus on budget in this particular space because of the infrastructure needs we have. And within this space, I think one stock we have already discussed earlier also in your platform was NBCC, and we continue to believe. And again, as a disclosure, this is our holding in our portfolio as well. We believe that NBCC would be our top pick in this entire basket. Look purely from a technical perspective, 2017 we saw the stock hitting a high of 144, and looking into this long-term rounding formation which is happening into NBCC, there is a very strong possibility stock can see levels around 147, 150 in, and eventually crossing its previous all-time high, which was being seen in 2017. So with a strong execution capability, strong order book, and with a lot of focus on infra, our top pick in this entire basket would be NBCC.
Okay, topic in this space would be NBCC. It's sticking very strongly higher, 7% up in trade. As for IRB Infra, its trust has won 1720 odd crore rupees of an arbitration award for a highway project. Devash, your sense in the entire infrastructure space, do you see merit in this space and a structural story that one should be looking at?
Yes, it is a multi-year long-term story. As we discussed in the top of the show, the government has a lot of room to spend. So I expect not only in this budget but years to come, the infrastructure story will continue to play. And we had many stocks under coverage, and many of them have achieved their targets. But still, if somebody were to look at investing fresh capital at this level, I think stocks like Larsen and Toubro do make sense. There is still money to be made here. And Ashoka Buildcon is the one which we recently reviewed. So stocks like them, but otherwise also, if there is any dip in the market at lower levels, if stocks do come and correct a little bit, infra is the space where we should look for opportunities to invest.
Right. Okay. Let's focus on a few more stocks. The stocks that are moving up, I think it's 180 point of a surge on the Nifty now. The Nifty is strongly moving up, 21,536. And the stocks that are further gaining momentum are stocks from the pharma space as well. I can look at Sun Pharma that's in focus, 3% higher in trade as of now. Devash, your own sense of how the pharma space is taking up, and we've been seeing a slew of brokerage houses report on Cipla as well, Kotak CLSA, they've all maintained a buy and increasing their target prices to 1500 odd. How would you look at some of these big heavyweight companies from the pharma pack, Sun Pharma, Cipla, Dr. Reddy's, and your own sense of which is the stock that you're more positive on?
Right. So, pharma has majorly two spaces. One is the regulated markets and export from the India, and then the domestic markets. The exports segment was facing a lot of issues. The price erosion of, and the regulatory uh, stringent regulatory norms on these Indian companies were making them little cautious on the market. They were not growing that well. I think that phase is about to end. So the generic prices in US as now the erosion in prices has come down. The consolidation in that market is helping the Indian players there. So all these large players post the results, stocks which you mentioned like Serum Pharma, Lupin, and Dr. Reddy's, all these will look attractive after the results. We continue to favor the domestic players, players which are there in the Indian market, mid-cap small stocks. We have coverage on many of them like Alchem, FDSC, FDC, Eris Life Sciences, Supriya, Granules. These are the companies which think has given us more returns, and that's where the opportunity is still there. So I would be looking to buy them or add to them in the portfolio on declines.
Okay. Sakshi, February's FNO expiry has started with a bang as far as the Nifty is concerned. Days high, and it's taking it away. All 5-minute candles, 3 so far, have higher highs and higher lows that point to a very strong momentum. So the first 15 minutes have worked very, very well. 21,554 for you, almost 200 points now with the Nifty. A strong move coming in on Bank Nifty as well, 470 points higher, 45,335. Let's just spread our wings and look at the broader markets. Very, very strong first day of the FNO expiry on the National Stock Exchange. Advanced decline ratio is 4:1. 1650 stocks in the green, 430 in the red. Taking it away is the Nifty Energy Index, 1.5% higher, 35,761. And no surprises at all, the two stocks that are leading this move, NTPC, Tata Power and BHEL. We have the man in question with us, Ashish Chaturmota. His pick on NTPC working very well over the last 3 odd months or so, and it's also the earnings boy. Ashish, a very, very quick view on NTPC for the day today. Any option trade that you like on this one, as also a medium-term view on BHEL.
So Shalji, I'll avoid any option trade because we focus more on now medium to long-term trends which are coming into play. But yes, power remains our top pick, and my sense is because this entire transition, the current capacity of renewable energy close to 178 gigawatt, which we expect to be 500 gigawatt in next 7 years, and that's a 17% capacity CAGR growth we are going to witness in this entire renewable energy segment, and where NTPC is also going to play a very, very big role with 30 gigawatt addition. So my sense is NTPC would continue to remain in focus, and I think the way the flow is coming into most of these power names, it looks like from a technical perspective 350 360 is on cards in our immediate shorter term time frame. In the long term, obviously the trend looks very promising, but yes, from an immediate short to medium term also, it looks like NTPC is well positioned to see this 350 360 kind of trajectory. From BHEL, as you rightly mentioned, is a good is a proxy for not just power, but also there is a lot of traction which is building into other segments. So my sense is 240 245 is on cards in BHEL as well. But as I mentioned, NTPC, Coal India, NLC India, SJVN, these are the names which we have been consistently speaking in all our discussions. And as a disclosure, most of these stocks continue to remain as our top picks in our portfolio scheme Apex PMS strategy.
Okay. You know what else is moving in the markets is the entire Adani pack. Adani Enterprises has now moved to the top spot as far as the Nifty movers are concerned. It's now up 5% as the top gainer on the Nifty, as also in the FNO space. We're also looking at Adani Ports now ticking higher by 3 odd percent. And the entire pack, you have Adani Energy Solutions 4.5% higher, Adani Power up 3.5%, Adani Green Energy 3.5% higher. You have the cement pack, ACC, Ambuja from the Adani basket, all ticking up higher in trade as well. Ashish, first to you and then to Devarsh as well. How are you looking at this fresh move in the Adani pack, and how would you see any particular stocks which are now should be on the investors list now?
So I think now from a topic perspective, Adani ports remain our topic in the entire basket. My sense is after consolidating for last 3 4 weeks, it looks like the stock has formed a new base around 1130, 1140 trajectory. Keeping this in mind from a pure technical perspective, it looks like stock is headed towards 1350, 1400 kind of trajectory. So Adani port would be top pick. Then I think even Ambuja Cement, which has seen a very massive breakout on the monthly charts around 550 zone. So I think this looks like the stock is headed towards 630, 640 in the immediate short to medium term time frame. So I think good 8 to 10% upside could not be ruled out in Ambuja Cement from current levels as well.
Okay, Devarsh, your take in the Adani Group stocks, any particular stocks that you also track?
So no, we don't have coverage over the Adani stocks. One space where I would like to draw attention is the cement. I think that's where a lot of opportunities are there, as Ashish and others have pointed out. We do like cement as a sector, and there we have many stocks under coverage. Shri Digvijay Cement is the smaller one which we have released. Apart from that, ACC Ambuja from the Adani pack where we like it. JK Cement, JK Lakshmi Cement, Shri Cement, Star Cement. These are the stocks under our coverage, and I think if investors are looking to invest at this level, margin of safety is there in the some of the cement stocks.
Okay. Well, so that's as far as the Adani Group stocks are concerned. As far as Ashish is concerned, it is Adani Ports as his top favorite, and from Devarsh, it's the cement pack that you can focus more on, where there is higher margin of safety. ACC and Ambuja from this pack as well. You know what else is ticking higher in the Nifty 500 basket is one stock, Infibeam Avenues, a very strong move, 15.5% higher for this one. Ashish, could you tell us, what's behind this strong surge? Of course, about a week ago, the company had posted earnings with a 15% uptick coming in on their profit factor. It is a very small ticket stock. Do you track this at all? And do you see there is merit in this move?
Sakshi, sorry, we don't track this stock, so I
Okay.
think I'll avoid any comment on this.
Okay, Devarsh, your take?
No, we also don't track it. One of the acquisitions which they did, there is some value there, and that's why the payment side of the business is ticking higher. That much we know, but we don't have any active coverage on the stock.
Okay. What we'll do right now is take a very short break. When we return, we will discuss more stock ideas for all you viewers. So don't go anywhere and don't forget to stay hooked on to Business Today Television. A lot more to follow soon.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back to Market Today. We are now at 9:38 a.m. It's a wonderful start to February's first trading session in the FNO expiry. The Nifty rocketing 178 points higher, 21,530 for you. 500 points higher on the Bank Nifty, right there, 45,355. Let's just look at stocks that have hit fresh record highs in the market so far. And you'll see a very nice collection of names right there in front of you. Let's start with RITES. This is again from the railway stable. Very strong move coming into this particular stock. You have a record high on NBCC. This is something that we've just discussed, a 52-week high on NBCC. You have a record high on Sun Pharma, 1411, up 3.2%. Let's look at record highs in stocks which are low ticket, high beta items. So they are IRB, NHPC, SGVN, National Aluminium, and of course Tata Power. We have a strong move coming in on Power Finance Corporation as well. Let's get Ashish into the conversation. Ashish, when you look at the names that I have taken, 5 out of 6 are PSU stocks. How are you positioning yourself in this one? And any picks apart from Power Finance that you like?
So we have already discussed about NTPC, Power Finance, NLC India, and my sense is, this entire PSU space is very promising. The entire power space is very promising. And to play this, we have been consistently recommending CPSE ETF, which we continue to believe is heading towards, towards a 3-digit mark. So my sense is, CPSE ETF is something which we continue to like as our top pick to play or to ride this entire power space. But apart from that, I think SJVN is one stock which is of interest to us. My sense is, this stock is going to see a very significant transition from a 2 gigawatt capacity currently. This company has targeted by 2030 they will be somewhere around 12 gigawatts. So there is a 6x capacity addition which the company expect. There is a strong news flow in terms of fresh orders. So my sense is stock is headed towards 140-145 kind of trajectory. Again, as a disclosure, we continue to hold our position in SJVN as our pick in the power space.
All right, Devash, would you have a pick from the power space?
So we do like this space. We have a long-term coverage on NTPC and NHPC. The stocks have run up beyond our target, so we'll wait for opportunity to invest. From these levels, none of these stocks have significant upside left for the year. Most of them, we had stocks like NTPC, NHPC, Power Grid, the CSC, Tata Power. All these are under coverage, but I think after the result, we'll have to review them again and come out with another recommendation. Right now, most of them are trading much beyond our yearly targets.
Okay. All right.
Sakshi, it's the big boy Reliance that is now moving 2751. Actually, let's revisit the index heavyweight space and then look at what's moving as far as the entire pack is concerned. Okay, one good thing, 8 out of 10 index heavyweights are in the green, and let's look at the top gainer there. It's going to be the banking space that's doing pretty well. We have Kotak Bank 1.7% higher, 1798. Axis 1.7% higher, 1059. Reliance, like I mentioned, after a long time, 1.6% higher at 2748. L&T, HDFC Bank, all up between 1.2 1.5%, and of course SBI 1.4% higher at about 619. The two stocks in the red are of course Infosys 0.7% lower and ITC, earnings boy today at 453, 0.5% lower. Let's get Ashish into the conversation and Devarsh as well. Devarsh, my question to you is on two stocks in the power financing space, which is RECL and Power Finance Corporation. What is driving this sustained multi-bagger rally in these two stocks? And then Ashish will present his medium-term technical view.
So there are three aspects to it. First was they were at the initial level, they were quite undervalued. They were trading below the book value. Many of them stocks, the markets were discounting it that they will not grow, they will not be able to grow their book. And once the growth in book started coming in, many people were worried about the uh, NPAs, the valuation, and that's why the valuation was below book or near book. Now we are seeing them that they have gone to three times, four times book because of the sustained business growth. So it is about the earnings growth as well as the valuation re-rating that has happened, and these stocks are trading at this valuation. Now, frankly, will I put more money into these stocks at this level? I think at three times book, four times book, I think it is difficult to put money into these not only the power finance company, the railway finance companies and others. So we would like to wait for opportunity on any dips to get back to these stocks. And if we are not getting them, I think the PSU banks offer equally attractive opportunities where the valuations have not run up that much. So rather than putting money into this PSU finance companies, the power finance or the railway finance, I would look at stocks like SBI or any other PSU banks where the valuation comfort is little more to us compared to these financials.
Okay. There was just last view before we let you go, and that will be from the FMCG space. ITC, I wanted your view on. The company will be reporting its earnings today. What are your key expectations? The stock has had a stupendous run over the last 2 years or so, but last 6 months is when it has really not performed that much. It consolidated after a big bang move. What do you sense now is in front for ITC, and how should viewers look at ITC at 452 kind of levels?
So, Sakshi, we had come out with a report with on in October of 23 with the target of around 450. So that has already been achieved. We look at the numbers, and the the talk of a demerger, the lot of some of the parts valuation of this company is much higher if they choose to demerge. So if there is any more clarity on that front, or if there is any movement or any announcement, that would make it interesting. Otherwise, around 450, I think it is fairly valued. FMCG as a pack is also where we are cautious in the market. Many of these stocks will not be able to show any growth because of the subdued monsoon this time. The rural demand has not picked up that much, and the valuations are already on top of 30, 40 times next year earnings. So I think FMCG is one of the areas where we are underweight, and we continue to remain underweight.
Okay, fair enough. Well, thanks a lot, then Devarsh, for being with us on this special edition to share your views. Ashish, tossing the same question to you. ITC, how would you advise traders to now act?
My sense is, from a immediate short-term perspective, stock is looking very, very sideways, and there are no immediate signs of recovery. So I think from a immediate short to medium term, I think stock is going to consolidate anywhere between 430 to 460 kind of trajectory. But from a medium to long-term perspective, I think any dip towards 440, 430 would be a very, very good opportunity to add into the stock, because from a pure relative valuation perspective, ITC is the cheapest play in this entire FMCG basket. And I think with this, hotel business also getting demerged, I think this is also going to create a lot of value unlocking. So from a medium to long term perspective, ITC would be our top pick in the FMCG basket. But yes, from a short to medium, it looks like stock is into some kind of consolidation or sideways trend. So from a trading perspective, it could be avoided. From a long term perspective, it could be added on dips.
Okay, 9:47 for us, Sakshi. There is no let up in the bullish element as far as the broader indices are concerned. The Nifty about 190 higher, 21,541 for you. And let's look at the pullers and draggers as far as this index is concerned. Now the first half an hour is over. It essentially means that this uptick has slightly more legs, stronger legs than we had initially thought. Reliance contributing 37 points to Nifty's 133 point advance. ICICI Bank contributing 23 points. 19 points are coming from HDFC Bank. Larsen is putting up with 16. and Kotak Bank with 13 points, which is pulling the index lower. No worries here. Infosys flat, it's contributing 9 points to the loss. ITC 7 points, Cipla, Dr. Reddy's, JSW Steel anywhere between 2 and 4 points. Nothing to be worried about. It's the PSU basket that's taking it away. Let's look at this one. The Nifty PSU banking index, it's doing phenomenally well in trade, and when you look at the other indices, you see smart gains coming in here, up 1.3%, 6008. All 12 stocks making the PSU banking index are in the green. That's a fairly strong move coming in on IDBI 8610. There is a very strong move coming in on Canara Bank 475, and of course there is a very strong move coming in on the PSU banking basket led by Punjab National Bank, which had come out with a very strong set of earnings. Ashish, you've mentioned your top pick there as PNB and Canara Bank. Anything else in the second rung of PSU banks that catches your attention?
So Shailji, even I think Bank of India is one stock which is looking quite promising. It has been consolidating between 140 to 130 trajectory, but it looks like the stock is headed to cross this resistance zone of 140 and eventually move towards 150, 155 trajectory. From a risk reward perspective, I think 130 is a strong base for the stock, and if the potential upside is towards 150, then I think the risk reward is almost 1:3. Again, from a valuation perspective, most of these banks are quoting around one-time price to book, so that also gives us a lot of comfort from a valuation perspective. And from a business perspective, I think with 17-18% kind of credit growth, most of these banks are well positioned to see a significant outperformance against its private peers.
Okay. Well, one more space, Ashish, that I wanted to draw your attention to, the retail space, especially the stocks like Trent and Aditya Birla Fashion Retail. AB Fashion has moved 9-10% odd in the last 1 month odd or so, after having a very choppy kind of last 1 year. But Trent is moving at record levels again, 32.75 currently being seen. What is your sense of this space, and any particular stocks that you're more bullish on, and is there a trend to follow?
So trend looks quite good from a same store sales growth perspective. We are seeing some significant jump in the numbers. So, but obviously the stock is at all-time high, and we continue to believe it can see significant relative outperformance against its peers. But one name which we have been consistently bullish and have been recommending is Titan. My sense is again after a good consolidation for last 4-5 weeks, I think Titan is headed towards 4,200 kind of trajectory. As a disclosure, we continue to hold Titan as our top pick in this entire consumption space, and my sense is stock has formed a good base around 3650, 3700 levels. So keeping this in mind, I think the next leg of rally can take stock towards 4200 kind of trajectory.
Okay.
Okay. Ashish's presence on the screen, and you have NTPC running away. Remember, we have its earnings today, and the stock in terms of volume, Sakshi, is also showing pretty good moves as far as the volume buzzers are concerned. Let's look at this thrust as well. We have NTPC in front of you. 49,25,000 shares are already traded, which is 25% of 5-day average, and you have the counter at 2.21% higher, fresh record high 321. Let's look at the volume buzzers in the NSE 500 space. Some stocks I'd rather not mark. AU Bank, now this is 2.5x volume, 76 lakh shares here, and the fall is on very heavy volumes, 10% lower, 637. So this should be worried. Rights, I have to mark this stock. My apologies. This rally ahead of the budget, the railway budget, 754, fresh record high, 10% higher, 1.14 crore shares traded, already 1.3 times the average. And Shriram Finance, 2331 blowout earnings, 1% higher, and already one-time average volume of 5 days have happened, which is 11.55 lakh shares. Uh, Breakouts happening on NTPC consistently, and the stock at a fresh high. Sakshi.
Absolutely. Ashish, from the oil and gas space, how are you looking at, counters like BPCL now? We've had a stunning run. Of course, BPCL will be reporting its earnings also again today. We are looking at ONGC definitely from the upstream companies
Oil
moving up
marketing
higher, but
space.
BPCL.
Yeah. So I think from a oil marketing company's perspective, there is some very strong relative strength we are witnessing in most of the names, whether it's HPCL, BPCL. And from a pure technical perspective, it looks like stock BPCL has formed a very, very strong base around 465, 468 kind of trajectory. And keeping this in mind, I think stock is headed towards 520, 530 trajectory in the immediate short-term perspective. So my sense is BPCL looks very, very interesting from a technical perspective, and also the kind of strength we are witnessing in most of the oil marketing companies. The entire sector is looking quite promising.
Okay. All right. Let's look at a few stocks
It's
then that are buzzing in
9:54.
trade. Yes, Shell.
Yeah, please continue, Sakshi. Now I have some standback questions for Ashish. We'll take them after your stocks have been marked. Please continue.
Yes, I just wanted to mark the stocks 177 points higher on the Nifty, 21,529. We're looking at Adani Enterprises taking it away, 4.5% higher. ONGC 4% up in trade. Sun Pharma 3.2% higher. Adani Ports is the one that's moving up, 3% up. SBI Life Insurance coming up in power. In the power space, you have NTPC, Coal India, Power Grid, all three of them ticking higher. We also have the banking names, Kotak Mahindra, Axis Bank, ICICI, HDFC, all pulling up the Nifty Bank Index in trade today. And then you have the infra story led by L&T, 1.6% higher in trade as of now. Right now, all the sectors, they're all buzzing in trade, barring just slight losses that are being seen on the IT and the realty pack. Rest of the sectors are taking it away. In the broader markets, you also have stocks like Delivery, the recently listed stocks, and the startup space, about 4% higher in trade. Then you have Engineers India, you have Endurance Technologies. These are the strong movers as far as the Nifty 500 basket is also concerned. Share.
Right. Now let's just pay attention to what the markets have done so far over the last 3 odd months or so, and then look at Ashish's medium-term perspective from then on. Ashish, we had a blowout November and December, something like a 13% rise on the Nifty, record highs, of course, and then we had 22,124 near the Ram Temple inauguration. Now, should the index be sideways till the budget? Do you think that the markets will pause after the interim budget before they resume their uptrend? What are the Nifty charts telling you when you look at maybe a 2-3 month trend?
So as you rightly mentioned, Shelji, I think broader markets looks like they are going to remain sideways. The reason being, most of the over-owned stocks which have got some significant weight at an index levels, they are not showing some real signs of strength, whether it's private banks, whether it's large cap IT. So maybe there is no significant downside, but the point is most of these sectors are either in a sideways trajectory, or maybe the stocks within these sectors which are contributing, they don't have a significant weight in index. So for example, in IT, if there is a strength which is coming, it is typically into mid cap IT companies like Persistent, Coforge, or something in the mid and small cap space. And that's why even though IT as a sector might be doing well from a mid cap perspective, but from a large cap perspective, sector heavyweights like, or stock heavyweights like Infosys, TCS, they are mostly into a sideways trajectory, so they are not going to push some significant move towards index. Same is the case with private banking basket, where HDFC Bank has got some significant weight, or maybe stocks like Axis, ICICI. Most of these stocks are sideways, and that's the reason my sense is index is going to remain sideways. sectors which are actually contributing to index, it's power, it's railways or defense or capital goods manufacturing, but put together the weight of these sectors are not very significant at an index level, and that's the reason there could be relative outperformance which can come into some of these sectors, but with this will not move the needle at an index level. So my sense is index is going to remain sideways, but with a positive bias. So my sense is, at least in the shorter term, a short-term base has been created around 21,200 trajectory. Keeping this in mind, I think a move towards 22,200 could not be ruled out. But broadly speaking, the real action is going to be of the index level, and I think that's where a lot of strength and trend is going to be witnessed.
Okay. And my final question to you, Ashish, before we bid you goodbye, what happens after May 2024?
Anybody's guess, Shailji, and I think we are also waiting how it pans out. But looking into the long-term positives which India is throwing, I think there's a lot of money which is waiting for just to get deployed into the market. We believe FIs have significantly reduced their positions in last 1 year, and for them this would be a good opportunity. If any kind of consolidation or dip comes into market, they will try to create a lot of positions because they can't afford to miss a market which is where the GDP is going to grow at 7% plus, where we have interest rates stabilizing, where we have currency which is stabilizing, and I think with a strong and even from a fiscal deficit perspective, we are in a controlled environment. So all these are the long term positives which will make sure India will become a favorite destination for a lot of these FIs which are sitting sideline at this point of time.
Okay. Ashish bhai, as always, thank you so much for your time, and also to the excellent advice that you always come up with, especially on low beta, high ticket items. We'll definitely remember SGVN as the pick for today, as also NLC India. Remember, these are all long-term outperformers according to Ashish bhai in his portfolio as well, and they need to be looked in that manner. Thank you so much, sir, and we hope that you'll reconnect soon ahead of the budget. Our best wishes to you.
Thank you.
All right.
Okay. Sakshi, a blowout
Yeah.
today, 235 points on the Nifty, 21,588. It gets better and better. The second resistance has been taken out on an intraday basis, and the index is now, how should I say, poised to recover all its mojo ahead of the budget. All naysayers, all people including me who are advising caution can go with the wind. The market never takes any enthusiasm, any care of that, and bhav bhagwan hai, usi ko salam karna hai. I again repeat, be a little cautious ahead of the budget. I may be sounding like a broken record, but such is life. Sakshi, over to you.
All right, and with that we will wrap up this special edition. 235 points higher on the Nifty, a very strong move like Shail pointed out. A lot of stocks that are buzzing in the F&O space too. Adani Enterprises, you have the power, finance majors, REC, PFC taking it away, both 4.5%, 5% up in trade. LIC Housing Finance, ONGC, Adani Ports, these are the strong movers in the F&O action. On the Nifty, I already pointed out a few stocks for you. So you have the power space, that is clearly the theme of the day. NTPC, Power Grid, these are the ones that are taking it away. We have ONGC as the top mover now, 4.5% higher. Adani Enterprises, of course, the Adani pack is moving very strongly. You have Sun Pharma, that's 3.7% higher. Reliance Industries, that's 1.8% up in trade. A strong move from the heavyweight counters coming in to support this kind of a very strong momentum in the markets. And the big bang heavyweight names, ICICI Bank, HDFC, Axis and Kotak Mahindra Bank, all also providing their thrust in the markets today. Sectors, barring the realty space now, all the sectors have pulled up into the green. ONGC, oil and gas really taking it away, 2.2% higher. Private banks, financial services, Nifty Bank, PSU Bank is turning out to be a banking major day as well. With that, we wrap up this special edition, but do stay tuned on to Business Today TV as we continue to get you such exciting conversation, and of course Market Masters at 12:30, so don't miss that one.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.